Good morning, ladies and gentlemen. A very warm welcome to all of you on Business Today Television. We are ending November on a high note. There is a record on the Nifty. There is enthusiasm and momentum across the large caps. And of course, there are 4 or 5 major tailwinds which should hold us in good stead as far as 2026 is concerned. But what will rise? What will fall? Where you will make supernormal money? To discuss that and a lot more, we are now joined by Mr. Harendra Kumar, Managing Director at Elara Securities. Mr. Kumar is a veteran of the Lal Street. He's been with Elara since August 2009. That's 16 years and counting. Before that, he was looking after research at Centrum Broking, and he started his journey in the Lal Street with ICICI Securities in the .com bubble zone. And he is a former reporter and has gone to the better side of the market. A very warm welcome to you, Harendra. Tidings are good and tailwinds are strong. What does 2026 hold for equity markets in India?
Yeah, indeed, I think after a gut-wrenching 18 months since the market peaked in September last year, people have been searching for the elusive earnings. I think finally the earnings are looking to come back. We've had the first signs of earnings turn in the broader market with respect to our coverage as well. And we see that the Nifty earnings will go up by around 13% for the next financial year and 15% the following year. So at least the trend trajectory for the next 24 months seems to be aligned, and that these are good tidings for the market.
Okay. It essentially means that will the Nifty compound at 13% in 2026 calendar and maybe 15% in 2027 calendar or financial year? Is that what you're trying to imply?
We calculate financial year, and that is the earnings. So the market will reprice earnings much faster than the actual earnings. So you could have periods of short bursts of outperformance if the market is more convinced, and that is the period where you should be in play with respect to generating your returns.
Okay. So that's the broader thread which is running at Elara Capital. Harendra ji, what has happened in the last 2 months or so is that we've seen a record high on the Nifty, but the breadth of the market is narrower. For instance, vast majority of retail investors hold mid caps and small caps in their portfolios where, not even a whiff of the rally has visited so far. Should they keep on being optimistic for 2026, or is this going to be a large cap show?
The early part will of course be a large cap show, but I think as the rally picks steam, it will be the mid and small caps. So that's been the trend, and that will be the trend going ahead as well. Because in terms of the valuation arbitrage, the large caps are sitting around 15 to 20% discount to their intrinsic value. So once that gets captured, it will be in line with earnings. So that's what our call is. But the broadening of the economy and more participants playing is where we see the alpha making opportunities. I would like to add here is that the twin blows that mid and small cap has given was, one is the RBI tightening liquidity, and also the market regulator tightening on the futures and options exchange as well, and in terms of the restrictions on margin funding, etc. Now as these cases loosen, more liquidity flows in, the liquidity will chase mid and small caps as well. So this is early part of the liquidity opening up cycle, which will play up in the mid cap valuation as we move ahead. So yes, so as of now it looks not so enthusing given the returns. But let me assure you, it will ease up, and there's more money to be made in mid and small caps than large caps as the rally gathers steam.
So, in the first phase, the discount that large caps are trading at to their earnings potential will be filled up, and then the rally will percolate to sectors which are below large caps. That should happen by, say, first quarter of 2026 or a little later?
I think there will be a broadening of the rally, hopefully before the budget itself. I think the anticipation of maybe the broadening of the government capex, which had also slowed down, interest rate cuts, which the RBI has been indicating would have been announced, and probably the US India trade deal should have also come out into the open. So there are a lot of catalysts waiting to happen, which could lift the overall market, which is basically very catalytic to mid and small caps rather than large caps.
Okay. Harendra ji, I was going through this wonderful report by Elara Capital. It says graffiti on its top. A very well researched 20-page document. Now, let us know how to proceed from now on. So, large caps are more or less at record highs, most of them, at least the sensible ones. How do we find out which are the stocks that will move next in the mid cap, in the small cap space? Do we focus on larger caps within mid and small, or do we have a sectoral view? How would you see the rally trickling down?
Yeah. So first and foremost is the continuation of the rally for the next quarter. You see the bank Nifty at all-time high. You see the NSE Auto is also all-time high. These are clearly showing you which are the leaders for the current rally. So this trend continuation will happen, and within that as well, you will have a broadening of the trends with respect to, say, SBI was leading, or Bajaj Finance led the last, the recent rally. It will flow down to some of the NBFCs. In the auto pack as well, after the large caps, the auto anchors will also come into play. That's one way of addressing the opportunity. And other is, I think, say a cap goods set of stocks that have corrected because order books have slowed. And if there is any semblance of return of order book with the government capings coming up, you should also see a lot of beaten on cap goods name rebounding as well. So our way of looking at mid and small is, obviously, we look at the sectoral top down, and we feel who are going to be the leaders in the large caps, mid cap and small caps. That's how we play it. We don't have an independent mid cap picking strategy other than, if we find some exceptional ideas.
Okay, so it's all sectoral led. Once you see an outperforming sector, you basically drill down into stocks where earnings have improved, but the rally is still not visible as yet. That would be the broader theme.
That's correct. That's correct.
Right. Now, let's look at two sectors. Harendra ji, you mentioned auto showing a blistering pace in terms of at least stock prices. Sales numbers have yet to catch up. But what's really happened in the NBFC space, in the financial services space, is that the rally is percolated down to mid caps such as AB Capital, L&T Finance. Some of the old pain points are also rising. I won't take those names. But the likes of Shriram, Muthoot Finance, blue chip names that we practically grew up with are showing signs of balance sheet strength as well as stock prices. How are you analyzing this financial services sector against the tailwind of interest rate cuts, higher liquidity? Is the rally fully valued?
Not yet. So I think the NBFCs have a long leg of growth. I think there are 2 or 3 benefits that will play upon the NBFCs. One, of course, is the falling cost of funds with RBI easing, the availability of liquidity. Typically, in such an environment, NBFCs have a more elbow room to lend and grow the market, which plays upon the multiples. And number 2 is, with the easing of the working capital cycle, business is doing well, the NP is also trickle down. So there is an element of multiple expansion that you'll see on the NBFCs. And then all asset classes like, be it home financiers, be it personal finance, gold loans, all start to do well. So when a sector does well, many a times, apart from the leaders, what you call is, even a weak player who's under delivering will start to deliver well. So a high tide lifts all boats. Similarly, you will see a whole spectrum of stocks doing well there. So our preferences, of course, remain Bajaj, LTFH, that is Larsen and Toubro Finance. You have Chola, all of these names go, but you also see a Canfin Homes, which is recovering from here on. You will also see microfinance doing well. So Credit Access Grameen or a Ujjivan Small Finance Bank. I think these are the ones where the stress had built up because of the NPA cycle. But there seems to be a case for these people, given that the outlook is going to be more positive than the recent tightening cycle. Yes, down the tail as well, there are a lot of opportunities.
Okay. That's an excellent set of stocks, which is a combination of large caps such as Bajaj Finance and Chola, and of course mid caps like L&T Finance, Canfin Homes, Credit Access, and Ujjivan Small Finance. That's the NBFC basket as far as Elara Capital is concerned. Before we take this forward, Harendra ji, where are spaces where earnings stocks are still trading at a discount to their earnings potential in the large cap space? The first prognosis that you mentioned.
Yeah, so some of the, like for example, you see in ICICI and a Kotak, which two large private banks are now trading around 2 times 1 year forward. I think the earnings are growing at 13-14%. And with incremental delta on growth and NIMs, the stock should trade higher. So typically they traded a premium to these numbers. So there is here where the convergence has happened, and it should start to do well from here on. So that is one point. Even historically, if you look at Bajaj Finance, given the growth outlook that's given for the next 4 years and the repricing should happen early on into the cycle, there's a lot of headway. So the financial sector index is somewhere, I think the opportunities are higher. Similarly, even in the auto index, I think given that Hero or Bajaj Auto or some other names, this is the early part of the cycle, because mind you, the consumer discretionary thematic is going to get another fillip with another 2.5 lakh crore being paid by the government for the pay commission. So there are many more legs to this consumer discretionary story. So I think it's in line now, and the premiums to a secular growth story will start playing up next year for some of these names.
Okay, and of course ICICI Bank, Kotak Bank and Bajaj Finance will also be an auto loan play, given the background that you've just mentioned on the consumption theme.
Absolutely. And I would, yes, and I would not be surprised if there are additional incentives given for the consumption boom in the budget. See, because I think the government is worried that the private capex is not picked up, and we've been relying too much on government capex. So unless the demand picks up, the traditional sectors are not going to invest in new capacity. So in our view, I think there will be continuous calibration towards getting the consumption basket up so that this private sector can start reinvesting into new capacities.
Okay. Now, two sectors that have really given supernormal returns are the capital markets index led by exchanges, and the India internet space. You could look at food delivery systems. You could look at the financial fintech space, the insurance online space. How are you at Elara mapping these two extremely popular and fairly valued or overvalued, depending upon how you look at it, themes? Is there more steam left in these two?
Yeah, so we've just come out with a thematic, on the banking and financial sector, where we covered a whole spectrum of banks, fintechs, exchanges, capital markets, insurance plays as well. So our prognosis is that when we analyze the globe, it is the exchanges which even outperform the asset managers. I think because they have a secular trend towards growth. Number two, they have no yield pressure. And it's India is a duopoly market. So you should have a BSE and NSE doing really well. On the commodity side, you have the MCX. So that's in the pecking order. Valuations for these names are not very expensive if you look at the other digital tech internet names. In fact, if you compare the other digital tech names, these have more headroom with a proven track record, profitability, and near monopoly status. With respect to asset managers, I think it's perfectly priced. We've done a reverse calculation of some of the names. From here on, given the SIP book given the asset growth of savings converting into mutual fund assets, they should compound at the rate of 15%. If you're satisfied with that kind of return, they will bring stability to your portfolio. But lower down the order, of course, is the you have NSDL, you have the KFINs, you have the registrars and transfer agents. They're on the smaller side, but they would be doing slightly better than the mutual funds because they have other revenue streams with respect to corporates as well. That's how we are playing the whole capital market space.
Okay, so these were popular, widespread stocks that we spoke about. The other, I don't know how to put this, but in terms of price, something that has been a very, very pleasant performance came from the metal side. Harendra ji, a pure commodity space, cyclical in nature, but a record high on aluminium stocks, both PSUs as well as private sector. A lot of strength coming into second rung government oriented PSUs in the metal space. What's happening here? Is this a trend where you see continuity?
Yeah, it's a very interesting point, Shail, because this is not from the local underlying fundamentals. This trend has been captured by our alternatives desk from the global flow analysis. So this sector is linked to the global sector. What we've seen is a lot of global funds are putting money into hard commodities. And what you see now is the metal index is testing its all-time high in India without the underlying fundamentals. So this is clearly currency liquidity rate underway, and the technical desk or alternatives points out that if it takes this out, you're going to see a rally which is far more ferocious than what we saw between 2003 and 2008. But it obviously keeps getting challenged by our fundamental analysts. But the point we want to put is money is flowing into this asset. It could be a weak dollar setup trade, or it could be giving you signals that the emerging market trade is set to take off. So it's a pure price call here, where the underlying fundamentals are still suspect, but it needs to be watched for future strength.
Okay, so that's something that may or may not move depending upon how global liquidity flows or exits that space. So that takes care of metals. Now, two, how should I say, old world sectors which we grew up with, pharma and chemicals. Chemicals, a pain point for the last 4 years. किसी ने भी पैसा नहीं कमाया बल्कि गया ही है, because we've lost time value of money and opportunity cost. Are there any green shoots in the large cap chemical space? How are you looking at it? And what are the 2 or 3 broader trends in the pharma sector?
Okay, so in terms of the pharma sector, what you saw is that the hospital stocks had done really well. In fact, they were a capex-led story. You would go out and announce a hospital and beds, and the market would reprice it. There is merit with respect to this trade, but my team points out that given that new hotels come on stream now, the margins will keep getting impacted as the asset utilization takes time to pick up. So the phase of series outperformance is over. From here on, there will be good compounders. That's on the hospital side. Diagnostics are suffering from increased competition and from the expectations laid out during the COVID phase. So they yet to re-establish their strength or ability to show steady growth there. So they continue to languish a little bit. The large cap generic space, has no new surprises. The CDMO trade, right? So I think the trend did play up in between on CDMO stocks, but I think the ask rate of performance from CDMO stocks from the valuations is unlikely to be met. So there could be some disappointments on the CDMO stocks as the earnings lag the expectations. So the safer bets are potentially Sun Pharma, Dr. Reddy's, or Aurobindo at this price. That is what my team has put out.
So we stick to the knitting as far as pharma is concerned, focus on large caps. Hospital stocks have done their calisthenics, and there are no outliers in the form of newly listed companies. You feel Blue Jet and all which might be multi-baggers of the future? Is there some kind of inkling at that newly listed space?
Maybe it would have missed our. We don't cover the stock, so we don't have any specific view at this moment on the company.
Okay, now that brings us to something that hasn't moved as yet, but potentially will move, the IT space. Harendra ji, again, we've seen the glory days of Infosys, where sales and profit used to rise 50% year on year, ditto for most of the sector, but now the growth is sub GDP. Is this a valuation hunting ground, or is this something that you're not even touching with a barge pole?
No, there will always be tactical plays. I think you need to watch for a turn in earnings of growth. That's where they'll give outperformance. But at this given point of time, they are a yield play. And typical narratives that come out is, they've become so much of a discount to Nifty. From here, there's a mean reversion. But these are theories. But they get repriced only if the earnings starts to play up. As of now, the earnings are going to be sub-trend. The only tailwind is the weakening rupee and maybe lesser bad news. Maybe you could see a pop-up trade with some easing on the H1B rules, or when the trade deal is announced. But with respect to alpha generation, I think the period would be a very short period of 3 to 4 months. They are not, long-term structural economy aligned stories at the moment.
Okay, fair point. I think they've given so much of returns to long-term shareholders that, this is a cycle probably they need to ride out by buybacks. Okay, Harendra ji, time draws to a close. So now I just want you to look at your crystal ball and maybe even close your eyes and think a bit deeply, which is 4 major tailwinds in India, actually 5 when you talk about the pay commission as well. Cut in interest rates, cut in GST taxes, cut in income taxes, rising liquidity, good monsoon. Now add to that the pay commission bonanza that's coming. A weak rupee as well. Now name 2 or 3 stocks which your research team has come up with, which could be modest compounders from here on, or outright multi-baggers given these strong tailwinds. Where would you deploy unreasonable amount of cash at this point?
So in the financial sector model portfolio, right, so we've debated this, which is India's best consumption stock. You'll put out Bajaj Finance. Right, because it goes out there, lends, facilitates spending. It's a great digital name. There's a huge benefit in terms of cost to income ratio because of technology coming off. So we outweighted Bajaj Finance to possibly some of the other names within this space. So as of now, the market is concerned about the growth rate or rising NPAs, but I think it will ride this out. But per se, with the catalyst that you just run down with to your viewers, this company fits the best to that. And second, of course, I think between Maruti and Hero. So you'll be surprised, of course, that people would have called out the death of maybe Hero, but look at the rebound, which means to say that India is still a base 100cc or 125cc economy, and with more money going into rural areas, it's got a fresh lease of life. And Maruti, so the small cc cars have come back. We might talk about SUVs, we might talk about other high-end cars, but fundamentally India is a value market, and I think this tells you a lot about where the demand resurgence will happen.
So is Maruti the new hero, or is the original Hero the new hero?
Maruti Hero for 4-wheelers and Hero for 2-wheelers is Hero. So I think both will do well, you can straddle both at any given point of time.
Okay, and both of them are Delhi based, which essentially means that you have to come and meet their management and meet us as well in the studios.
Definitely, love to do that.
Okay. On that wonderful bullish note, Harendra ji, we'll call it a day. Your interview comes at the fag end of November. We've already had a record high, and we are looking at a very positive outlook in the market post a very modest 2025. Thank you for your time, and here's wishing you all the best.
Thank you, Shailendra, very much.
That, ladies and gentlemen, was the top research man in India, Harendra Kumar, MD at Elara Capital. Lots and lots of stocks have been discussed. The top picks are Bajaj Finance by a very, very large margin, Hero Motors and Maruti from the auto stable, ICICI Bank and Kotak from the banking stable, and from the NBFC space, L&T Finance, Chola Finance, Canfin Homes, smaller ones like Credit Access Grameen, and Ujjivan Small Finance Bank. That's how it looks, ladies and gentlemen, for the next 6 to 8 months or so. Mid caps and small caps will come back. Remain patient. Thank you for watching. Stay glued to Business Today Television.
Developing biotechnology for decades. The result is high-performance sneakers that enhance your natural foot movement. To do this, our engineers scan thousands of athletes' feet, developing technology that aligns your foot with nature's design. The result is high-performance sneakers that enhance your natural foot movement.
भारत के लिए आज बहुत ही बड़ा दिन है। 2030 का कॉमनवेल्थ गेम अब ऑफिशियली इंडिया को मिल गया और इस वक्त मेरे साथ हैं मनसुख सर, खेल मंत्री। सर, काफी दिनों से हम ये देख रहे थे कि भारत बड़े बड़े खेल आयोजनों को भारत में कराना चाहता है और कहीं ना कहीं ये